Now let's talk about something that's been gaining a lot of attention lately, a shift in the value of currency. Personally, I believe we are going to see a move toward a value-added currency. However, I also think this shift won't happen immediately. It's likely to follow the full rollout of the digital transformation. Once the necessary hardware and software have been installed, the systems are fully functional and training has been completed. On top of that, a rise in global oil prices will probably be another key factor that needs to fall into place before the shift fully materializes. To understand where we are now, let's take a moment to reflect. Just a few years ago, a single US dollar had significantly more purchasing power. Inflation and market fluctuations have changed that over time. But recently, we've seen what could be described as a major leap in value. Today, the US dollar has reached a point where $1 is effectively valued at around $1.32. At first, that might sound contradictory or confusing. How can a dollar be worth more than a dollar? What we're talking about is the dollar's strength in comparison to other world currencies and how that shift plays out in the real economy. This change has far-reaching implications. It can affect the prices we pay for goods, our travel plans, and even how we invest or manage our finances. For example, if you're planning to travel abroad, this shift could mean that your dollar now stretches further. Your vacation budget might go farther, giving you the chance to enjoy more activities, better accommodations, or upgraded dining experiences, all without increasing your spending. If you're shopping for imported goods, whether it's electronics, clothes, or food, you might notice some price drops. A stronger dollar means those imported products can be sold at lower prices. That's great news for consumers. But there's another side to it too. If you run a business that relies on importing goods, your costs could decrease, which can improve your bottom line. However, if your business involves exporting US-made goods, this shift might hurt a little. A stronger dollar can make those exports more expensive for buyers in other countries, which could reduce demand. So how did this change happen? Currency values don't shift randomly. They're influenced by a range of factors including economic growth, inflation, interest rates, and political stability. Lately, the U.S. has seen some positive economic trends, such as stronger job growth, lower inflation, and increased investor confidence. These improvements have made the dollar more attractive on the global stage. And it's not just internal economic data that matters. Global trade agreements and diplomatic relationships also influence currency strength. If the U.S. negotiates favorable deals or maintains stable international relations, confidence in the dollar tends to rise. All of this might sound abstract, but it has real effects on everyday life. If you're an investor, a stronger dollar can make U.S. markets more appealing to foreign investors. This increased investment can boost the overall economy, fueling growth in multiple sectors. But again, nothing is without its drawbacks. As U.S. exports become more expensive, some American businesses that depend on overseas buyers may struggle to remain competitive. So what does this mean for you? It means paying attention. Staying informed about economic trends helps you make smarter decisions, whether you're thinking about traveling, investing, or running a business. If you're planning a vacation, it might be a smart idea to lock in rates now. And if you're a business owner, now could be the right time to revisit your pricing strategy or renegotiate contracts based on the current exchange rates. Now let's shift to something that's been causing quite a stir: what's happening at the redemption centers. Recently, the screens at these centers have gone dark. That might not sound like a big deal on its own, but in this context, it carries a lot of weight. When the screens go down, it's often interpreted as a signal that rate changes are imminent. The blackout could be a form of preparation, a pause before new values are introduced. Meanwhile, bank screens are still active, still displaying current rates, so we know it's not a system-wide issue, but something specific to the redemption centers. This contrast between silence at redemption centers and activity at the banks is interesting, and it's getting people talking. It creates a sense of anticipation. When screens go dark, it's not just a technical issue, it's a message. It's a sign that we could be on the edge of something important. That moment of silence might precede a significant shift in value. So why should this matter to you? If you're planning to redeem, even a small change in rates can have a major impact on how much you receive. A sudden spike could mean you walk away with more than expected. But if rates drop, you might receive less. This is why timing is critical. If you've been sitting on the sidelines, now may be the time to pay close attention. It's also helpful to talk to people who've gone through the process before. Friends, family, or community members who've already redeemed might be able to offer valuable insights about their experience, what they saw, how the rates changed, and how their timing played into their final outcome. Their stories can help you build a better strategy. Right now, online communities are buzzing. Forums, social media, and news sites are full of speculation, theories, and personal experiences. This is a great time to engage with others, ask questions, and share what you know. The more we collaborate and share information, the better we can understand what's really going on and how to respond. And we also have to zoom out and think about the bigger picture. These shifts aren't just about individual redemptions. When large groups of people redeem and rates change, it can influence the entire flow of money in the economy. Market trends respond, consumer behavior changes, and the ripple effects can be felt in everyday transactions. Whether it's shifts in interest rates, inflation, or even employment trends, it's all connected. So what should you do while we wait? Prepare yourself. Take notes. Start tracking key developments. Connect with others. Make a plan based on different possible outcomes. Think about what you'll do if the rates jump suddenly, and what your move will be if they don't. Are you comfortable waiting it out, or do you prefer to act now and lock in what's currently available? Your strategy could be the key to maximizing your gains or protecting yourself from unexpected losses. Staying flexible is one of the most valuable things you can do right now. The financial landscape is constantly changing, and the more adaptable you are, the better you'll be at navigating it. Keep checking for news updates, watch the forums, and stay active in conversations. Whether the next big update comes through a financial news outlet or a trusted community source, being ready to act will make all the difference. Lastly, don't forget that your voice matters. Share your own thoughts and experiences in the comments below. Let others learn from your journey, just as you've learned from theirs. When we share knowledge, we all grow stronger together. As we wrap up, remember, currency values can shift quickly. Staying informed is your best tool for making confident, well-timed decisions. Whether you're traveling, shopping, investing, or planning for redemption, having the right information helps you take control of your financial future. If you found this video helpful, give it a thumbs up, share it with your friends, and don't forget to subscribe for more updates like this. Thanks for watching, and I'll see you in the